Good morning, students. Hope you all are enjoying the e-learning initiative of Cambridge International School, Dasuya. I, Sunil Kumar, PGT Accountancy in Cambridge International School, Dasuya. Dear students, now we are going to start revision in accountancy. Today, we will start chapter number 3, that is theory base of accounting, accounting standards, and IFRS. In the previous class, we have done total 11 principles of accounting. So let's recapitulate all those 11 principles today. First, business entity principle or accounting entity. Business is considered to be separate and distinct from its owner. Number 2, money measurement principle. This principle says all the transactions and events that can be measured in terms of money are recorded in the books of account. As there are many measurement units, like for water we measure it in liters, for road we measure it in kilometers. In the same way, accounting transaction, they are measured in terms of money. Principle number 3, accounting period principle. The life of the enterprise is broken into smaller, usually 1 year, at the end of which income statement and the balance sheets are prepared to know the results and the resources of the business available. Number 4, full disclosure principle. There should be complete and understandable reporting on the financial statement of all significant information relating to economic affairs of the entity should be disclosed to all the users, whether it is the government, the banks, creditors, researchers, etc. These principles disclose all the information relating to the firm. Principle number 5, materiality principle. This principle refers to the relative importance of an item or an event. It is a matter of exercising judgment to decide which item is material and which is not. Let's take an example to understand materiality principle. As this principle says, something is material or important for some business and the same thing is not important for the other business. For example, if Reliance company purchases an asset costing rupees 1 lakh, it is not so material for the organization because it has a very huge capital investment. At the same time, a new business is opened by Mr. A, who is very new in the market, having very less capital. He invested rupees 2 lakh as capital, and if he purchases any assets costing rupees 1 lakh, it matters a lot for that organization. So that asset of rupee 1 lakh is material for the organization, but at the same time the asset which is purchased for rupees 1 lakh is not material for the Reliance Industries. Number 6, prudence or conservatism principle. This principle says do not anticipate a profit but provide for all possible losses. In other words, it takes into consideration all prospective losses but not prospective profits. The application of this concept ensures that the financial statements present a realistic picture of the state of affairs of the enterprise and do not paint a better picture than it was actually. 7. Cost concept or historical cost concept. According to this principle, an asset is recorded in the books of accounts at the price paid to acquire it, and the cost is the basis for all subsequent accounting of the assets. Assets is recorded at a cost at the time of its purchases, but it systematically reduces in the value by charging depreciation. Number 8, matching principle. According to this principle, it is necessary to match revenues of the period with the expenses of that period to determine the correct profit or loss for an accounting period. Number 9, dual aspect or duality principle says every transaction of the business has two aspects, a debit and a credit of equal amount. Number 10, revenue recognition concept. According to this principle, revenue is considered to have been realized when a transaction has been entered into the obligation to receive the amount has been established. It means when the transaction takes place, it is assumed that if the organization sells something, it is assumed that the organization has earned that money, whether the cash has been received or not. Principle number 11, verifiable objective concept. This principle says that accounting should be free from personal bias. All accounting transactions should be evidenced and supported by business documents like vouchers, cash memos, etc. So after recapitulating all the 11 principles of accounting, let's start today's topic, that is IFRS. Stands for International Financial Reporting Standards. Business enterprises around the world should not speak different languages while sharing financial information. Therefore, there is a need of single set of accounting standards that can unify the accounting practice worldwide. Now, IFRS is playing a role which is bridging a gap between or among the countries on the globe. It is a language which is spoken by all the countries while doing business. In today's competitive world, business is not restricted to the geographical boundaries of the particular nation. Today, there are no geographical boundaries in business. So, we require a language which is similar to every country. So, this language is IFRS, which is bridging the gap among the nation while practicing accounting. What is the meaning of IFRS? IFRS are a set of accounting standards developed by International Accounting Standard Board, IASB. The standards issued by IASB are based on sound and clearly stated principles. Therefore, IFRS are referred as principle-based accounting standard. Let's discuss the differences between IFRS and Indian GAAP or accounting standard. First, IFRS are principle-based while Indian GAAP or accounting standards are rule-based. IFRS do not prescribe any form of preparing financial statement, that is, balance sheet, profit and loss account. Under Indian GAAP or financial statement, it is prepared according to the Schedule 6 of the Companies Act 1956. Now, it is Companies Act 2013 later amended in 2014. Second, IFRS is based on fair value concept while Indian GAAP or accounting standards are based on historical cost concept. IFRS require that assets and liabilities of a company should be shown at fair value as at the date of balance sheet. Thus, in fact, depreciation is not charged on the cost of the asset, but it is valued as on that date, and the difference in the opening and closing valuation is debited or credited to profit and loss account. So, let's see how India has dealt with IFRS. India has two options, either to adopt IFRS as they are or converge the Indian accounting standard in line with IFRS. It is decided by the Institute of Chartered Accountants of India to converge its existing accounting standards in line with IFRS. The converged accounting standards titled IND as have been issued and notified. Today, we are also going to start basis of accounting. This is chapter number 4. There are two bases of accounting, cash basis accounting and accrual basis accounting. Let's discuss both of these one by one. The first is cash basis accounting. It is a system in which transactions are recorded when cash is received or paid. Entries are not recorded when the payments or the receipt is not made in cash. It means if there is a credit transaction in the business, it is not recorded if the company is following cash basis accounting. Second, when cash basis accounting is followed, outstanding and prepaid expenses and income received in advance or accrued incomes are not considered. These four expenses and incomes are not recorded if the company is following cash basis accounting. Let's discuss the advantages of cash basis accounting. Number one, it is simple basis of accounting as adjustment for outstanding expenses, prepaid expenses, income received in advance, and accrued incomes are not recorded. Second, it is suitable for those enterprises where most of the transactions are on cash basis. So, if there are credit transactions in the organization, this basis of accounting is not suitable. On the contrary, disadvantages of cash basis accounting. Number one, it does not give true and fair view of the profit or loss and the financial position of an enterprise. Second, it does not follow matching principle of accounting. That is, revenues equals to expenses, which shows the clear or the fair profit or loss of a company. Number three, this system does not distinguish between capital and revenue items. Capital items mean once in a long time or once in a life, and revenue items mean reoccurring in nature, which is happening again and again. So, this system does not follow or distinguish between capital and revenue items. So let's start to solve a practical problem on the basis of cash basis accounting. Question number 1. During financial year 2019 and 20, Kanika had cash sales of rupees 3,90,000 and credit sales of rupees 1,60,000. Her expenses for the year were rupees 2,70,000, out of which rupees 80,000 still to be paid, that is outstanding. Find out Kanika's income for 2019 and 20 following the cash basis accounting. Solution. In cash basis accounting, we have to take only incomes and expenses which is related to cash. No credit transaction or outstanding prepaid should be taken into account. Now we are going to solve this question. Number 1, cash sales. The cash sales in the question is 3,90,000. Less expenses. This expenses should only cash expenses. So we have done the calculation, that is total expense of rupees 2,70,000 minus rupees 80,000, which is still to be paid. It means outstanding. We do not consider outstanding. After deducting 80,000 from 2,70,000, we get 1,90,000. Out of cash sales expenses, cash expenses are minus. We are left with 2 lakh, which is net income of the organization. In this way, we solve question on cash basis. Hope we all understand. Now the second one is accrual basis accounting. Under accrual basis accounting, unlike under cash basis of accounting, income is recorded as income when it is earned or accrued. Credit sale is recognized as sale irrespective of the fact whether amount has been received or not. Under this system, outstanding and prepaid expenses are adjusted. In accrual basis accounting, all the transactions, whether it is related to cash or credit, all the transactions are recorded. If any company who is going to follow accrual basis of accounting, they have to record cash as well as credit transaction. This accounting system is followed by all the organizations in the world as well as in a country. Let's discuss its advantages and disadvantages. First, advantages. Number 1, it is more scientific as compared to cash basis of accounting and hence is preferred by accountants. Number 2, this basis of accounting shows a complete picture of financial transactions. 3, this basis discloses correct profit and loss for a particular period and also exhibits true financial position of the business on a particular day. Disadvantages. Number 1, this system is a little complex as many adjustments are required to be ascertained the true financial position of the business. Number 2, the accounting process is too elaborate. Let's understand accrual basis accounting through practical approach. Question number 2. During financial year 2019 and 20, Kanika had cash sales of rupees 3,90,000 and credit sales of rupees 1,60,000. Her expenses for the year were rupees 2,70,000, of which 80,000 still to be paid. Find out Kanika's income for 2019 and 20 following accrual basis accounting. Let's start its solution. In accrual basis accounting, all incomes and gains, whether they are in cash or in credit, should be recorded. So let's start to solve this question. Total sales equals to cash sales plus credit sales. Here the cash sales are 3,90,000 and credit sales are 1,60,000. After adding both the sales, we get total sales of rupees 5,50,000. Less total expenses, whether they are cash or credit, The total expenses are 2,70,000. Here we are considering outstanding expense of rupees 80,000 also. So after deducting total expenses out of total sales, we get 2,80,000 as net income of the organization. So I think everything is clear in this accrual basis of accounting, in which we have to take both cash as well as credit transactions. So after completing cash basis and accrual basis of accounting, we are winding up our session for the day. Thank you for listening it very patiently. Tomorrow we will be back with another topic. Till then, stay safe, stay healthy, and stay at home. You all are advised to solve practical problems of cash basis and accrual basis accounting. Try to solve question number 5, 6, and 7 from T.S. Garewal's book. Thank you. Have a nice day.